Well, speaking of the markets, what are the technicals telling us about what may come in 2015?
With us now is the king of the technicals, J.C. Parets, Eagle Bay Capital founder and president. J.C., good to see you.
Thanks for having me.
Let's start with the S&P. Broad market, broad index, straight up for the past 2 years. I say straight up. There are obviously dips. This is a 2-year chart, I believe, right? Yeah, 2-year, but you have this range that we're going to. Are we going to continue to see that, or what does this tell you about the past 2 years looking into the future?
Yeah, I mean, we're seeing higher lows, higher highs. You know, this is a nice, beautiful uptrend channel defined by the two parallel trend lines. And I think you fade it towards the top of the channel, and you could buy it towards the bottom. We put out a note to our clients 2 weeks ago that we were bullish going into the end of the year. I think we can continue to see that. And then the upper trend line is probably somewhere around 2180. Granted, it's a moving target, but I'd be fading S&Ps up there tactically. But structurally, I mean, there's nothing wrong with it.
Looks good.
But, you know, that chart looks good over the long term, but, you know, some are saying that the S&P has topped out so wonderfully on a technical basis for 2014 that we're going to see more of a dip for 2015. Do you worry about that, especially in the first half of the year?
Yeah, listen, I mean, we're going to get dips, we're going to get volatility, but based on the whole structural picture, big picture, there's nothing wrong with it. And seasonally, 2015, all signs are pointing to a higher market. So we'll just have to watch price, which at the end of the day is, you know, the most important thing.
I see Dave's ready to point to another chart
well,
for the mid caps,
we
right?
usually talk about big caps.
Yeah.
We talk about the small caps, Russell 2000. Why do you like to talk about the mid caps here? Mid cap 400.
They're a very important group. They're the Jan Brady's of the world, right? They're stuck in the middle. So I think this is a big breakout. I mean, the more times that a level is tested, the higher the likelihood that it's going to break. So we have this overhead supply throughout the second half of 2014. We broke out of that recently. So let's call it 265. As long as the mid cap 400, MDY specifically, can remain above those levels, I think we see much higher prices. So that's the key level that we want to watch.
All right, I'm going to make a Vanna White call and go for oil next. All right, obviously oil has been the big story, the fall in crude prices. From a technical basis, though, what are you seeing?
Sure, so we want to look at things from multiple perspectives. I see here we're looking at the, this is a daily chart first, so this is a much more shorter term time frame. You know, we're looking for a mean reversion. We do a lot of sentiment analysis, Cheryl.
Hold on. Mean reversion. Explain.
That's right. Well, so everything in history, except for the Lehmans and the Bear Stearns of the world, individual stocks that have gone to zero, ultimately they do revert to the mean, whether they come down to the mean or up to the mean. In this case, we're looking at a 200-day moving average currently sitting 65% away from current prices. So the mean reversion process is likely to begin very soon. In addition, we do a lot of sentiment work, and we're seeing more pessimism today than we've seen since crude oil bottomed at the end of 2008. And if you recall, crude oil made one more low in the first and second week of 2009. I think we could see something similar. So we want to watch momentum diverge positively on these new lows that we're seeing. If we do, we take out 55 and a half, I think we're off to the races.
I know you don't like fundamentals. You're a technical guy, but you got to recognize that to compare anything to 2009, that was comparing an economy that was in the midst of a recession. Don't you have to consider that fundamental when looking at a chart and comparing it to 2009?
No. You know, when we look at economic data, all of that is backward-looking, so we want to look at forward-looking indicators, specifically in the market. And markets tend to behave very similar ways. We had historic pessimism down at the beginning of 2009. As we enter the new year,
but we don't have that pessimism now.
We do. In fact, it's the exact same amount of pessimism.
Not about the entire economy. I mean, we were in the midst of a recession.
Crude oil specifically is what we like to focus on here because that's what we're talking about. That's the discussion. So, you know,
it was related to the economy. The price at this point was related to the economy.
And perhaps yes, perhaps no. We can make a similar argument today. But at the end of the day, if we're talking about buying and selling crude oil, we have to look at price. We have to look at sentiment. I see a rubber band very much stretched. So 55 and a half is the level we're watching. If we could break out 55 and a half, I think we're off to the races. But we only want to be long if we're above that. Below that, there's nothing to talk about.
You used to send those charts and your analysis over to the Saudis. Have a little discussion with them about crude oil.
He wouldn't mind.
Well, the fundamental thing.
You go there.
Thank you, J.C. J.C. Parets.
J.C. Parets, thank you very much. Well,